Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to spend a little bit of extra time going over the TA at the end. And the reason for that is pretty simple. A couple of things can occur from here, and one of them is bullish, and I am happy to remain long and strong. In fact, I'm even looking to add exposure in some asset classes. And the other thing that could happen is the market could be about to fire a subtle hint, and subtle hints are one of the best advantages traders can have, okay? If the market fires a subtle hint, most people, because of course it is indeed subtle, will miss it. But if you know what to look for, a subtle hint can be very, very, very advantageous to be able to spot and to be ready for ahead of time. So I'm going to show you that. I'm going to spend a little bit extra time on the charts. I've got some very interesting Bitcoin stuff to show you. Some of it is incredibly overly bullish, but that's how we like it. I've got a tiny bit of sort of macro, if you want to call it that. I don't know. We'll use that term loosely. But before we get into all of that, okay, I have to kind of, I never thought I'd say this, but I have to touch on this, okay? So I've been ignoring this for 5 or 6 days, but it's gotten to the point now where I've been overwhelmed with comments saying, Camel, recessions are bullish. And I don't know where this idea has come from. I don't know if this is just a little bit of confusion. I don't know if people are saying this that are brand new to markets. I don't know if there's some larger accounts that are pushing this as a narrative. I have no idea. But what I do know is the first couple of times I saw a comment about recessions being bullish, I kind of just laughed. I didn't really think much of it. But for 5 or 6 days now, I've been getting more and more comments every single day telling me that recessions are bullish. And as such, I feel the need to come on here and just give my 2 cents on this, okay? Number one thing I'm noticing is, let's say the market has rallied like this, and then it undergoes a big 50% bear market decline, and then eventually it goes back up, okay, and continues on. What people are seemingly doing is taking this as point A and this as point B, and saying, well, Camel, okay, between points A and point B, the market rallied 3%, so therefore recessions are bullish. And I'm not really sure why people think it's okay to ignore that. I'm really not entirely convinced why, but that seems to be one thing I'm noticing. People keep presenting data sets and saying, well, between this date and this date, the market rallied 3%, so therefore recessions are bullish. But from my perspective as a trader, it's about staying long for as much of this part as possible and then sidestepping this so that I don't have to give back all the gains made in the uptrend. I want to be out the market during the recession, or out the market during the bear market at least, and then I want to be back in somewhere around here when momentum has returned and I think that the bottom is in. Seems kind of crazy that I'm saying this out loud, but the amount of comments I've got really do seem to justify this today. And the other thing I think I need to point out here, pertaining to recessions being bullish, is it is malpractice to wait for them to tell you that we're in a recession or that a recession has officially been declared. If we go all the way back to the GFC, okay, and I put in some dates, this date right here is approximately 31st of October. That was the ultimate high before the recession and the great financial crisis, and a 57% drop from top to bottom in the NASDAQ. So here is where they declared the recession officially. Okay, and when they officially declared it in December 2008, they said that it started officially in December 2007. A full 1 year later, a full 12 months after the fact, did they officially come out and declare a recession. So for me, it begs a couple of questions, doesn't it? Do you think investors, pensioners, people that lost their houses, people that couldn't feed their children, do you think by the time the NBER came out and officially declared a recession in December 2008, people were surprised by this? Do you really think after all of this move that people were sitting there and saying to themselves, no way, how could anyone have known this was the case? How could anyone have thought that we were in a recession? What do they mean we're officially in a recession? Okay, by the time 57% has been wiped out of the NASDAQ, and like I said, people have lost their houses, people can't feed their families anymore, people have lost their jobs, all of that stuff. It was very obvious to absolutely every man and his dog by the time they officially declare it that we had indeed been in a recession for the prior 12 months. So sitting and waiting for them to officially declare a recession is not going to cut it. And I think this is where some of the confusion pertaining to recessions are bullish is coming from. I think people are looking at the official dates that were declared and they're saying, well, they didn't come out until December of 2008 and declare a recession. And what happened to the market thereafter? Okay, 12 months later, it was higher. Okay, but again, this seems like a very, very silly argument, and I'm kind of disappointed that I have to be making content on this. As a side note, something that is quite dark about this is if losing your job, losing your house, losing your pension, your entire net worth in the stock market, whatever, as if that's not bad enough, okay? It's estimated that 10,000 people took their own lives during this 12-month period, okay? It's estimated that 10,000 people in the US alone decided that money was worth more than their time on this planet, okay? And the likelihood is that number is actually a lowball estimate. So sitting here and saying recessions are bullish, it seems to me to be completely insane, but I can tell you the amount of comments I had tell me that an awful lot of people think that somehow we can just mark point A here and say, well, point B over here is higher, so therefore recessions are bullish. Or you can wait for them to declare it officially down here in December and then look forward and say, see, recessions are bullish. Okay, I think you're missing the point here. If the market is going to undergo a big drawdown, we want to sidestep that. We do not want to be long and strong in here. Something else worth pointing out is during this, okay, this is a 57% decline top to bottom, but individual stocks, most of them were down over 80%. Okay, most of them were down over 80%. One last thing that I think is worth pointing out, okay, is I've been making the case that by the time the NBER come out and officially declare a recession, they're going to announce that we entered a recession sometime in June or July. So I'll put this at the start of July, something like this, which means there's a very good chance that we're going to get something like this play out, in my humble opinion, okay? And then they're going to come out after the fact, sometime in here, and officially declare that a recession started 12 months prior, just like we saw in 2008. I really do think this is quite a likely possibility. To sum up, okay, please don't cherry pick the data and say, well, between point A and point B, right, we went up 3%, so therefore we're going to ignore this. Please don't do that. Also, please be aware that they are always deliberately late to report and declare the recessions, okay? They are not going to come out and tell you that we're in a recession now because it will cause panic selling, and they don't want that. They need people to buy the dip the entire way down. Please understand that from my personal perspective, okay, I don't care about a recession at all. At all. I don't care if we get one or not. A lot of people seem to think this is about being able to wait for a recession to unfold and then come on here and say, ha, I told you so. Okay, I don't care about a recession. I care about staying long and strong until the market changes. If that means we stay long and strong for years to come, then happy days. But if something like my initial yellow squiggle here is going to play out, okay, and then we're going to eventually get into June or July of next year, and then they're going to tell us that we'd actually been in a recession for over 12 months or something like that, then the last thing I want is to be buying every dip on the way down. The last thing I want is to be holding longs, not exiting the market, not sidestepping the drawdowns, okay? We've done a really, really good job on this channel at catching the majority of this move. The last thing I want to do is give it back in 12 months or so during some kind of bear market and recession. Yesterday I showed this, and this is a big talking point at the moment. And again, people keep getting really annoyed about this kind of thing. They're like, wow, rate cuts are stimulative, and well, why are we ignoring these other rate cuts and stuff, right? But the reality is, unless we're cutting into normalization, then these rate cuts historically have marked major tops for the stock market. So do you want to be holding through this and just saying recessions are bullish and buy every dip on the way down? Or do you want to sidestep and then buy everything much lower down? And the original poster of this, okay, said that, look, this post actually caused rage. And I can see that. I can see that in my comments, and it wasn't even my post. And a lot of people are apparently saying, you know, why are we ignoring these 1 or 2 data points? Why aren't we talking about the fact that we cut rates here and the market rallied? Well, the reality is the backdrop, okay, is not supportive of these cuts being stimulative. The backdrop is not currently supportive of these rate cuts being accommodative to markets. Instead, we've got the unemployment level spiking just like it did in all the prior recession instances. And notice in the yellow scribbles here, we went down 36, 48, 27%, 34, 51, 58, 35%. Doesn't it only seem reasonable we are going to get a bear market unless this unemployment and all the other macro data rapidly shifts in the other direction? As ever, it's not about calling recessions. It's not about being right or wrong, okay? It's about just being able to position on the right side of the market. If things are going to get ugly, I want to be able to sidestep the drawdown. And whether or not that drawdown is coming, again, is neither here nor there. It's only a case of, at the moment, inarguably, we have an 85% correlation to 2007, 2008, okay? That's just the data, that's just the facts. The current price action is incredibly similar to 2008, and it doesn't have to repeat. But if it does, we'll be able to look back in hindsight and say, you know what, a top in October followed by a big bear market and a global recession was really, really obvious. Okay, and again, let's just sidestep this, okay? Let's not be buying the dip and holding it the whole way down when off the lows, we could very quickly get a doubling, even without making new all-time highs. So once again, open to all possible outcomes. Moving into Bitcoin, okay? It's been a while since I've shown anything like this, but I thought this was really, really, really cool. What this is sending Bitcoin via Lightning to a US bank, and it is settled in US dollars. So it arrives in a US bank as US dollars, and it only takes around 10 seconds. So you have your sats in a Bitcoin wallet, you tell it you want to send $1 worth of Bitcoin to a US bank account. And you can see here, I think they bring up a little timer in a second. It takes about 10 seconds or under 10 seconds to ping this Bitcoin across the Lightning channel and convert it immediately into dollars and have those dollars arrive near instantly in a US bank account. Okay, and you can see here, pulls up the everyday checking account, and in there, nearly instantly, is $1 that was converted from Bitcoin. So we are slowly but surely seeing this thing evolve to actually be a medium of exchange as well as a store of value. So that is pretty cool, if I do say so myself. In terms of the Bitcoin charts, slowly but surely, they are quietly improving. You can see here, very, very similar setup to back in the 2015, 2016 era before that massive rip-roaring bull market in 2017. Are we going to see something like this occur for Bitcoin in the not too distant future? Have we got an enormous bull market that is going to catch a lot of people offside? One thing we do know is that HV, historical volatility at the bottom, has just broken out. Okay, let's get a magnifying glass. Take a look at this. At the hard right edge, it has broken out, just like it did back here. And last time we got breakout retest resumption in historical volatility, we saw Bitcoin do Bitcoin things. Are we going to get breakout retest resumption that forces Bitcoin into a parabolic blow off top? And as I said at the start, okay, some of these bull charts for Bitcoin are insane. Hopium, copium, unrealistic, call it whatever you like. Okay, but again, I sit here and say, if we were to do something like this, would it be the biggest surprise in the world? Would it be the craziest thing Bitcoin's ever done? Or would it just be Bitcoin doing Bitcoin things? Personally, I don't think it would be that crazy. It's not a call, it's not a prediction. But I could certainly see this measured move target being met from the breakout level. Even if we were to fall slightly short of that, I don't think anyone is going to be upset with the performance of Bitcoin. So is this too bullish? I would imagine most people would think yes. As ever, one day at a time, and we will see what the market can give. So as promised, I wanted to spend a little bit more time on the S&P 500 and a couple of other charts here, because as it stands, we are seemingly quite bullish here. Okay, we've broken out the downslope in red, we've recovered our second angle. So does it mean we should be looking for third and final blow off top angles to come in? I think so. However, when I was saying earlier on about subtle tells from the market, so far, objectively speaking, if we zoom in, we have got one high and now a lower high. Now that is a subtle tell. One of the easiest ways to spot waning momentum is lower highs. And until those lower highs are broken, until we make a new structural high and a change in market structure, this is a subtle tell from the market that we could be about to experience further downside. So if we do have some kind of shakeout here, it will be important to see that very quickly thereafter we make a new higher high. If we don't, then this is a subtle tell from the market that momentum is waning and we might actually have to entertain that actually being the top. So what are we looking for here? We are looking for, and this is very critical, a new higher high to be made. Otherwise, we are still in where I consider to be a danger zone. But the NASDAQ is significantly, if I move this fractal out of the way so we can see, significantly below its prior high. Okay, now if I put the fractal back, maybe this is what we're doing, and we're just breakout retest resumption of the blue level, and then we're going to continue to push on and clear that prior all-time high. Maybe that's what's coming, and if so, okay, long and strong, I don't really see a problem with that. But if we start to roll over here, okay, if we start to lose the upward slope in second angle, if we start to close candles back below the breakout level in blue, then we have likely got a fake breakout, we've likely got a failed breakout, and we are making lower highs again, which again is a subtle tell from the market that momentum is waning. So for now, it could certainly be one of these little shakeouts. It could certainly be something in the neighborhood of a half cycle low, I wonder. Let's measure this. Day 15, so somewhere around day 20 would put us at the end of this month or the first week of September. If we get a pullback into there and we hold above all the supports and then bounce, that would just be a half cycle low ready to resume to the upside. That would be pretty bullish, and that would likely be me adding positions, assuming we can get some nice clean technical setups along the way. But again, start to close below supports, start to lose the second angle, start to fail to be able to make new higher highs, then that is the market firing warning signs, and that may well have to be entertained as a major top. All of this bearishness, all of this potential downside action is invalidated immediately as soon as we close above a new all-time high price. Okay, as soon as we close above the prior highs, all of that bearish doubt goes away. And for me, I will be max long, max strong, looking for that third and final blow off top angle, but there is still currently a little bit of work to do. The Dow Jones, on the other hand, looks a lot more encouraging, okay? And the reason I say that is it is far closer to making a new all-time high. In fact, I think it did make a slightly higher high. Let me zoom right in. Yeah, it did, okay? Just a few points above the prior all-time high, not on a closing basis relative to this wick, but that is the highest close for the Dow. So the Dow is going in the right direction. The Dow is showing that it is ready to look for its third and final angle. It hasn't got anywhere near as much bearish doubts as the S&P and the Nasdaq do. So overall, so long as we can close this week or by early next week be above those prior highs, then I would say we can breathe a sigh of relief. Bulls are fully in control and we are looking for third and final blow off top angles to push the trades until they violate. But again, as I said, we are in this critical zone where if we start to make lower highs, if we start to roll over here and lose supports, okay, then things could get pretty bad pretty quickly. So just something to be aware of. As it stands, I remain very, very optimistic now until such time as we get those bearish breakdowns, support failing to hold, and confirmed lower highs. But as always, I want to have the situational awareness to see both sides of the trade. I don't want to just be saying, yep, long and strong if this thing is going to break down. So it'll be important to keep our eye here. For me, the VIX as well is telling a story. Okay, we know that we are due a cycle low sometime around the first week of September. It doesn't seem to want to spike just yet, and the cycles are indeed down for about another week or so. So happy days there, so long as we can, again, see that VIX push down into a cycle low. Again, if we can, I'll be looking to add some VIX exposure. And for me, that should be synonymous with seeing new highs printed across the board for the indexes. Again, if those lower highs are going to indeed be lower highs, and what comes next is something like this, then we would be thinking, okay, and expecting the VIX not to find a significantly lower low, and instead maybe it will forced one early and start to creep up. So if the VIX starts to creep up and the lower highs are confirmed in the S&P, then we possibly have some bearish implications going forward. And of course, the inverse is true. If the VIX does what it's expected to do based on its cycles, which is move lower, and we get new closing all-time highs for the S&P and the Nasdaq within the next week or two, then I would say long and strong across the board, and everything is still going very much according to plan. Gold is getting pretty late in this daily cycle, so I'd be thinking we are due some kind of quick flush and shake out into a cycle low. As I've been saying over and over again, that is an opportunity for me to add to positions. I'm noticing silver right into critical resistance, that major $30 level, which is also a double whammy of resistance because we've got the downward slope in red. But I would think this thing probably is going to attempt to break out over the coming sessions, so keeping a close eye on that. There is a trade setup idea if it can break out something akin to this. Something I've been noticing for the dollar is a lot of the cycle traders have either this as a 3-year cycle low or this as a 3-year cycle low, and some of them even have this. But I've noticed of late, they have started to question whether or not their counts are correct, and we could be about to actually see a slightly later than expected, but still legal 3-year cycle low for the dollar show up. So something like this would make a lot of sense. If this really isn't a 3-year cycle low and neither is this, then wouldn't it make sense that the dollar is going to bleed much, much lower as we complete the final blow off top portion? Okay, and then once we've got a 3-year cycle low, we could expect a lot of dollar strength, and all of that speaks to that whole deflation, stock market meltdown, people fleeing risk assets to hide in the dollar, synonymous with recessions. And we know the Fed is late to inflation. We're going to get confirmation of that, I think, on Friday this week with the PCE data, and then we've got on the 11th of September, we got the CPI data coming out. So slowly but surely, all the stars are starting to align here. And really, the only missing component, right, is for Bitcoin to do Bitcoin things. So far, it is making higher highs relative to this high and higher lows the whole way up. Obviously, Bitcoin is very volatile. It can undo all of that in a single candle if it wants to. And equally, it could also blast through here in a single candle. I'm not saying either one of those things is likely. For now, it's a case of being long and strong, and we'll see what the market can give. So that's it from me. I hope you found value here today. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.